Welcome to TradeTheMBI.com. This is John's reports for the 26th of June. Well, Friday saw more of that little bit of continuation, and we just kind of filled in the bottom of that positive extreme, which left this little tail right here, which has just been hit in the post market. Slight DOC spread here on the DOC readings, and white perking up, getting pretty darn close to taking out the magenta in this particular case. So, we've got a little bit of change taking place. However, you still got rising gold and complete reset of short-term buyers. So I think this again is just one of those pauses that resets. But now that we're at the key area, we're going to see if there's any residual strength. I'd be watching MBI red moving below zero and whether or not we get any pivot going above that. But still strong shakeout here with the magenta still well above the plus 15, even though we have the crossover again. That has been a justification for the current weakness. And just a matter of watching that turn around. You can also see on the shakeout the beginnings of a new strand of white rising, and that will be significant because, again, when it does flatten out, that's usually when you get your most significant pullbacks. Oftentimes, these represent just the short one. You get another bounce up before the final turn. And of course, the market is reacting in some cases to this Russia stuff, which at the end of the day, for all the hyperbole, you ended up with the Pentagon, last week coming up with an extra $6 billion to spend on something. Then you end up with a sort of coup, not coup, but at the end of the day, what actually happened was basically the Russians, without opposition, were able to reposition some 40,000 plus troops in a matter of days, all to the North Kharkiv region without so much as being bothered by Ukraine or anything else. So, what really happened there? At the end of the day, the Russians really achieved a great movement of forces and repositioned them completely. And who knows what happened to the $6 billion that the Pentagon found extra to give to Ukraine. Doesn't make any difference. The idea of upheaval, though, in Russia would definitely stir the markets and creates a bit of uncertainty, particularly when it comes to U.S. reaction, whether or not now this prolongs conflict situation because they think that maybe there's some weakness that they can exploit or whatever. As much as they've thought that all along, it's just been a meat grinder for the Ukrainians and has not gone well at any metric that you can come up with. TLT, treasuries, people flocking into safety from that, and that's created an artificial rise in the move and lowering yields, which, strange as that is, it's going to have to correct back to the downside simply because Fed isn't changing its mind. And with oil prices being soft as they are, they don't have to be as aggressive. Obviously, a lower 60s range for oil in a continued period would be much more helpful, at least from an inflationary standpoint. And then they may be able to stop their rates. But until they've overdone it, we won't know, because the Fed always overdoes it because they never wait quite long enough for these things to get absorbed before the full impact of them is felt. From a euro popping back up off of its bottom thing there, but at the end of the day, the eurozone in recession, nothing viable happening there. From a gold standpoint, it's literally just holding on. There's really nothing taking place there. The major rally in Bitcoin and things like that after the whole idea of Blackwater and Coinbase, making these setups for these additional fund traded capabilities is moderating just a little bit, and we kind of saw that would definitely need to be the case. Now, whether or not we get a MBI weight lead over declining magenta is really going to be the key on this one, and whether or not that magenta dips below the 33. All positive extremes on those increases, so something like that is not out of the question, but it's going to have to be with the readings to propose it. You can see the big difference between Bitcoin and its 100% versus ETH only at the 50 range. So definite power differential right there. From a 50K standpoint, there's just a lot of back and forth and pretty much just neutralized within it. We can see in the post market, a little bit drop off here in this pre-market setup, but half of it's already been pulled back up, and puts us pretty close to where the close was from Friday's action. So not a whole lot of anything. But that's the long and the short of it. If we go back intraday, and that it was just fairly soft, choppy back and forth, and that led to most of the down run. It was all pretty clean and well within ranges of expectations. Still, nothing to be overly freaked out about. Like some people are calling for the falling of everything, but they've never been right. At some point, I guess they will be, but I think we'll see it in the readings long before anything like that takes place. As always, though, trade well. We'll talk again later.